Hi there traders and welcome to the recap show for yesterday's European session. We'll start with the FTSE as always. Remember, you can still sign up to the Keyzone service completely free of charge. The link to sign up is in the box below on our YouTube channel. It will be becoming a subscription-based service in the next couple of weeks, so please sign up today to make use of the reports for free and also get special launch offers. So, starting with the FTSE, as I said, for yesterday's session, which was the 4th of January, Wednesday the 4th of January. These were the zones of reference that we had. We said that the FTSE had broken from its range at 75.47 to 75.55, and this has held as support, albeit that it had been slightly uncertain and unclean, and it could continue to provide support today. Initial resistance was at 75.80 to 75.87, with main resistance at 76.19 to 76.27. So let's go and have a look at the FTSE yesterday. Okay, so you can see the market opened up here. We came down. We just touched this 75.47 to 75.55 zone. We got the liquidity grab from those overnight lows. So that was a really nice reversal, and that took us up into that zone of resistance at 75.80 to 75.87. This is a potential reversal. It's a bit aggressive. There wasn't the liquidity grab. If we'd had the liquidity grab as well, I think this would have been a valid reversal, but not for me. I wanted to see that liquidity grab. That then took us back down towards those overnight lows, so a nice would have been a nice trade there, but not quite good enough for me. We then came up, we pushed through the zone. We did get a sort of continuation pattern of sorts here, which is valid. I think I probably would have preferred a bit more of a breakup and then a pull back to the moving averages and something around this area here. That would have been my ideal structure. However, that's a very aggressive continuation off the 8 moving average, having broken up above the zone, pulled back, and then a continuation pattern. So that is a potential trade. We then do have another one here. This one is better. Not quite back to the zone, but we have retested there. So that was a potential trade. That one there is slightly better than this one, just because we've got that full acceptance above that zone by that point. And then, as you can see, we came back down and we just chopped around mostly in the afternoon session, which can be expected because we did have some US news out at 3 o'clock, which you can see created all of this chop here. And then we also had FOMC last night as well. So, good couple of opportunities, certainly on the open. That one there with the liquidity grab at the support zone, and then the continuation once we broke above that initial resistance. Unfortunately, the reversal at the initial resistance zone wasn't quite good enough, wasn't quite strong enough for me. But if you had managed to get something, that would have been valid as well. So that's the FTSE. Now let's go take a look at the DAX. Okay, so these were the zones of reference on the DAX. We said initial support was at 14,130 to 14,150. Initial resistance was at 14,280 to 14,300, with sustained breaks above there, initially targeting 14,360 to 14,380. We said we had, because we'd broken out of that range, we was back in another range that had established itself in early December, and whilst above 14,050 to 14,070, we can revisit 14,565 to 14,585. It was unlikely to hit today, so any longs should also be well managed. So let's go and have a look at the DAX yesterday. Okay, so you can see we pushed above that initial resistance zone of 14,280 to 14,300 on the open there. No real sort of clear breakout signals. This one actually here is a breakout pattern. Quite aggressive being there right on the open, and that is actually a nice breakout pattern. And it's also not clear of the zone, so it would have still been into the top end of that zone. So that's a very aggressive one, and one that I didn't actually see in real time. And like I say, I don't know if I would have taken it anyway, because it was right into the top of that zone. We then broke above it, got the acceptance above the zone here. If we'd seen this pattern at this point here, that would have been a really nice trade, but we didn't see that. That then pushed up into that the next zone at 14,360 to 14,380. So that target hit quite nicely as soon as we broke above that 14,280 to 14,300 zone. This zone reacted, and then we got a little bit of chop, and then you can see we broke above. Now, if we had managed to pull back into this zone, I would have looked for a retest of here, and then, but by the time we broke up above this zone, we were getting quite extended on the hourly time frames. So any longs are a little bit more aggressive. Excuse me, a little bit more aggressive. But as you can see, whilst we're above that 14,050 to 14,070 zone, this upside momentum has still continued. We have paused at these minor zones here, which is why I said any trades need to be managed. So if you did get long here and you hadn't taken all your position here, you really want to be scaling out. Or if you had gotten in any other longs and you were holding a position, you really want to be scaling out as you move up and hit, and connect with these minor resistance zones. We still haven't quite hit that 560 to 585 zone. Sorry, 565 to 568, 565 to 585 zone. That would have been a big ask yesterday. We got much closer to it than I really anticipated. Because the market is so extended, but that could quite easily hit over the next couple of days. We do have some more news out, especially tomorrow with NFP, and that could affect the sentiment in the market. But at the moment, all the time we're showing this price action, and until we see something to the contrary, we can still look to buy and be bullish on the market. So that's your reports. Please let me know how you're finding them. Please let me know how you're getting on. Comment, subscribe to us on the YouTube channel. Hope you're having a great week, and I'll speak to you soon. Cheers.